As of Wednesday, January 10, 2024, BlackRock, Fidelity, Grayscale, and 8 other financial institutions received approval from the SEC to provide spot Bitcoin ETFs. Now, what the hell does this even mean, and how does it impact investing, cryptocurrencies in general? That's what this video is about. Let's go. What's up, investors? I'm Bafi, and typically I do not cover crypto topics, but there's a historic moment that just took place when the SEC provided some of these financial institutions the ability to provide spot Bitcoin ETFs. And so what exactly is spot Bitcoin ETF? Okay, so get ready to go down into that digital rabbit hole, and I'll do my best to simplify and explain things thoroughly, so by the end of this video you have some clarity and good understanding of this. There are different ways of buying Bitcoin, like getting it through a crypto exchange or investing in funds that follow the price of Bitcoin. Another way is through Bitcoin's future exchange traded funds, aka Bitcoin ETFs, where you technically don't own the Bitcoin itself. However, you do benefit as the price of Bitcoin goes up. In this case, we're gonna focus on spot Bitcoins, which means you're actually not betting on the future price of Bitcoin itself. When you have ownership in spot Bitcoin ETFs, you actually do own the Bitcoin, and it actually carries a little bit more risk. Why? Because it can go up or go down to zero. And you're not just betting on its potential future. Whatever's happening to it live right now, you own it, and therefore you are responsible for anything that happens to it. So in a nutshell and simple terms, when you actually buy spot Bitcoin ETFs, you actually own the real thing. People and financial institutions have been trying to get approval for spot Bitcoin ETF for over 10 years now, and there's been a lot of legal battle back and forth, and the SEC didn't just approve it just for BlackRock alone. They approved it for Grayscale, Fidelity, and 8 other financial institutions, and this approval came about on Wednesday, January 10th, 2024. If you're new to financial markets and investing in general, SEC stands for the U.S. Securities and Exchange Commission, and they are the governing body and responsible for a lot of the financial regulatory and things within the system, right? So they are the ones that approved this spot Bitcoin ETF. So what makes spot Bitcoin ETF unique compared to other Bitcoin ETFs? Spot Bitcoin ETFs, unlike derivative Bitcoin ETFs, have different structure and exposure to the price of Bitcoin. Spot Bitcoin ETFs directly own Bitcoins, providing a more straightforward and intuitive ownership for investors. And one of the beautiful things about this is that the transparency when it comes to spot Bitcoin ETFs is much higher and better. You have more clarity. Why? Because each spot Bitcoin ETF corresponds to an actual amount of Bitcoin ownership. On the other hand, derivative-based ETFs lack transparency because the way that it operates and moves is based on the future contracts and things and variables outside of the actual value and price of the Bitcoin. And so there's not enough transparency, clarity, and like accuracy and safety net for a lot of investors to purchase that. That is why the approval of spot Bitcoin ETFs is such a huge movement and change within the way that many invest in the cryptocurrency world. How does spot Bitcoin ETFs work? Basically, the Bitcoins are kept in a vault managed by custodians and by trusted custodians. And basically its goal, or the way it operates, is just mimics how Bitcoin price changes throughout the cryptocurrency market. So the ETF purchases Bitcoin from others or special crypto exchanges, and it basically keeps what it purchases in a vault that is tightly secure, and it's literally like a vault. Think of like a bank vault, right? But more like a digital currency / Bitcoin safety net box. Okay, so they purchase these ETFs and they put it in the vault, and it's securely tight. There's a lot of security measures in place to make sure that investors purchase, when they buy these spot Bitcoins, that their money is safe. And when it comes to investing, trust is perhaps the most important thing. If you can't guarantee that people's investment or money is going to be safe, forget about it. So this vault provides that extra security that investors are looking for and a better transparency. And that's part of the reason why many people have a challenge or don't trust the crypto market or the cryptocurrencies, because there's a lack of transparency and lack of security, right? Because of this new structure based on spot Bitcoin ETF approvals, it's much safer, your money's secure, and guess what? You're not prone to, say, cyber attacks or hacks and people just stealing from your crypto wallet and stuff like that. Now, once the security measures in place after the purchase, the ETF then puts out the amount of Bitcoins available, the amount of spot Bitcoins available for the public to purchase based on the amount of Bitcoin that they actually bought. When these spot Bitcoin ETFs are offered to the public, the share price of each of these spot Bitcoin ETFs is the same exact price as the actual Bitcoin itself. Why? Because they actually do own the Bitcoin itself. And these are traded now on any regular exchange. And that is why Grayscale, Fidelity, BlackRock, and 8 other financial institutions now have access to provide this product to the public. And it's really interesting because now in that scenario, it allows more trust, more safety, more investment opportunities, more cash to be able to come in, and is a much more safer package in a way to invest in the cryptocurrency market more on a broader scale without taking on a lot of the dark web / weird space of risk that's associated to the entire crypto, and in this specific topic, obviously Bitcoin. And once somebody purchases this spot Bitcoin ETF, the stock prices will fluctuate live as the markets are open. And it will always be the same price based on same price of the Bitcoin itself, right? And so it's essentially, it simplifies it or normalizes it into almost investing in, say, like your Vanguard S&P 500, your index funds and so forth. It kind of brings it to that level of access, credibility, and trust for everybody else. These financial institutions, APs, aka authorized personnel, package these ETFs, right? These spot Bitcoin ETFs. And based on what the investors and the public are looking to purchase, they kind of package it together and then they give it to the public. And then we can all begin buying and selling spot Bitcoin ETFs. So in a nutshell, when it comes to spot Bitcoin ETFs, it allows both big investors and small investors to partake in the cryptocurrency market in a much safer, transparent way without having to worry about private keys and private wallets and all these different pieces that comes along with it. That has made the crypto space very unattractive, uncertain, and it's kind of taking away a lot of credibility and its potential, right? This is really the next stage of making this a much more universal opportunity and access for everybody to partake and potentially build some wealth on that side as well. For people who already own Bitcoin, this spot Bitcoin ETF approval may not seem like a big deal. However, experts do believe that this is going to be a huge game changer and is going to bring a lot more investment attraction, more money, influx of money and capital into the crypto space, and allow other cryptocurrencies potentially down the road to also have their own spot approval ETF. So part of the reason why this approval is such a big deal is because there are a lot of investors that are cautious about managing these Bitcoins themselves. And in this case, when you purchase a spot Bitcoin ETF, you don't have to manage anything because you don't have the responsibility of keeping track of your private wallets or potentially getting scammed or getting hacked. These firms have bought, let's say, 100 Bitcoins, and they put out spot Bitcoin ETFs of, let's say, 100 shares, and each share has the same price as whatever the Bitcoin price is as it's trading day in, day out, going up and down. And so you don't actually do anything. You don't have to manage it. You don't have to worry about stuff. You don't have to stress about it. You just buy the spot Bitcoin ETF just the same way you would buy any other investment in the stock market, and you just relax, enjoy the ride. Also, this approval is a big deal because essentially it legitimizes the fact that Bitcoin does have a huge potential in terms of an asset class, a way to build wealth, a way to preserve and invest your capital. And because it is approved by the SEC, it is way more respected, valued, and is getting closer to being kind of put into that governing bucket, and is getting closer to being regulated. And that's really the biggest challenge that the cryptocurrency space have had, whether it's Bitcoin, Ethereum, you name it, is the lack of regulation surrounding it and the transparency surrounding it. So this is bringing it much closer to where ultimately it will end up being at, and that's a much better, safer financial tool and instrument to generate capital appreciation over time. So we'll see. Wall Street is super excited and eager in anticipating these ETFs to hit the market because there are asset and fund managers that manage basically a total of $30 trillion. And so even if 1% of that $30 trillion makes its way into the spot Bitcoin ETF space, that's a huge game changer for the entire cryptocurrency world in itself. To give you a more accurate number, that's basically $300 billion going into spot Bitcoin ETF purchases, and that legitimizes the product and it makes it more attractive to investors. The next question is, how does this come into the market actually impact the price of Bitcoin itself? And we can certainly say that because there's going to be increased activity in this space, it should impact and affect the stock price, or I said stock price, the price of Bitcoin to go much higher, because we've seen Bitcoin grow 150% over just this past year. And currently, at the time of recording, the price for one Bitcoin is $46,000, and these are prices that we haven't seen since April 2022. However, it's important to note that there is a chance that when these products hit the market, that the price of Bitcoin will go down. Why? Because sometimes it's just the nature of the beast. You just never know how things play out sometimes, right? So for example, even if a stock goes public, it IPOs for the first time, which IPO stands for initial public offering. A stock can now go public for $20 a share, and in the same day it can go up 20%, 50%, or it can certainly go down 20 or 50%. Initially, there's a lot of volatility, uncertainty. Nobody knows how things are going to shake out to be, but most of us are confident that after that initial wave, initial shock of it, there's going to be more influx of cash and capital coming into these spot Bitcoin ETFs, and it will continue helping Bitcoin continue its incredible run since last year and a little bit more the year before. Now, we all know that in this world, no goods, services, or products are provided for free, and so it's important that we learn and understand the cost structure and the fees associated with purchasing these spot Bitcoin ETFs. As an investor, part of your duty and due diligence is to know how much you're paying in fees. And the institutions that have been approved for this spot Bitcoin ETF, they are charging insane amount of fees. They're charging from between 0.2% all the way up to 2%. And that may not sound like a lot, but it is ridiculous amount of fees. Let me put it this way. The average investor in the stock market that doesn't have any financial knowledge of how these fees and things work will end up paying over $150,000 in their investment lifetime just in fees alone. Now, what that really translates to is you end up missing out on like $400,000 to $500,000 throughout your investment lifetime because you paid $150K plus in fees. So you literally miss out on $500,000 because of those fees. And right now, the average fund manager fees is hovering around 1%, give and take. And so 1% is a big deal. Now, we know that some of these funds here, in terms of the spot Bitcoin ETF, some of these fees associated with that is between 0.2% all the way up to 1.5% and 2%. So just picture what you're paying for in fees. And perhaps that's why you keep hearing a lot of things about buying index funds and ETFs, because if you compare these spot Bitcoin ETF fees and what fund managers are charging, when you compare that to the S&P 500, you are paying 0.03% in fees. So you're not even paying 0.1% in fees, 0.03%. And so you get to retain more of the earnings and the profits as opposed to paying all these fees to fund managers, advisors. And in this case, because it's spot Bitcoin ETF, you end up paying 0.2 to 1.5 or 2% in fees, which erodes a lot of your earnings and gains. Nonetheless, obviously not everything about spot Bitcoin ETF is bad. There are a lot of pros and a lot of things to take away from it. And so we're gonna talk about the pros and cons. But before we did that, I wanted to make sure you fully understand the fees associated to the products that you're gonna be interested in or probably buying at some point in your investment journey. The first advantage or pro when it comes to spot Bitcoin ETF is that it's convenient. It provides a lot more access to everybody, both large and small investors such as you and I. You also don't have to worry too much in terms of the security measures or the transparency of it. It is also regulated in this case, since it's approved by the SEC. That will be governing how these proceedings and everything goes surrounding that space. And you don't have to worry about managing, everything in your crypto wallets and getting hacked or getting scammed. So there's a lot of convenience surrounding that piece. Next is liquidity, because it's easy to buy and sell Bitcoin through your regular brokerage, same way you buy and sell your stocks. It is also familiar and it's easy for the traditional investors to navigate. Another big advantage, which I've actually mentioned throughout this video, is the regulations and the regulatory body behind it, which is the SEC. This makes it safer to actually buy crypto to buy Bitcoin without having to deal with some of the pressures and challenges. You have that protection, you have that transparency. And so that is a big step in the right direction for the entire crypto market, and in this specific case, Bitcoin. Last thing is the tax implications. In some cases, you're better off holding spot Bitcoin ETFs because of the tax implications and advantages versus holding the cryptocurrencies yourself. And on top of that, traditional investors are very familiar with the taxation associated with ETFs, and so it makes it easier for them to also leverage and learn and take advantage of spot Bitcoin ETF / cryptocurrency market. I will be doing you a disservice if I do not touch on the disadvantages and potential risk associated with spot Bitcoin ETF and just the cryptocurrency space in general. And the first one is volatility. Most people might think the stock market is volatile, but it is nothing compared to the cryptocurrency space, Bitcoin, and in this case, spot Bitcoin ETF. And so many people are not acclimated to actually understand and emotionally weather the storm, because you can lose big money in crypto. The ETF aspect of it should help, but there's still going to be a huge amount of volatility, more than your regular stock market activities. Maybe an analogy that would kind of help you understand how there's a drastic difference between stock market volatility and cryptocurrency / crypto market volatility is, picture the stock market volatility more like a snail. Maybe like you're skating, you're on your skateboard just going down the road. Okay, that's stock market volatility. Cryptocurrency / spot Bitcoin / crypto market volatility, it's like a Formula One speed racer at the Daytona 500. I don't even know what the cars they're driving, but it's going that fast. That's the range of volatility and activity and a whole lot of mess. So if you're somebody who has heart problems, and for the nerds out there that are just like me that need a little bit more technical accuracy in terms of the volatility, the stock market volatility index is around 16, while the crypto market volatility index is just over 60. Despite great progress with regulation, there's still a lot of uncertainty surrounding it, right? There's not like a super clear-cut way of how things are really going to operate in a way that all investors can really kind of see that, okay, these are all the specific measures, these are everything governing it. And so there's still a lot of uncertainty surrounding the regulatory space of it. Nonetheless, it's still making great progress since it just got approved. We have to keep in mind that the cryptocurrency world is still evolving and always changing. And so regulatory bodies such as the SEC have to also look at it from that perspective and change along with it, and try to make sure that you're protecting the public as much as possible in regulating these things. And so many things can change from now to the future when it comes to tax implications, fees, just certain criteria, certain expectations. There's a lot of things that's gonna change and happen. So that's part of the reason why there's so much uncertainty in the regulatory environment of it all. It's probably one of the hardest things that the governing bodies, SEC, and some of these other institutions have had to deal with and figure out. It's complex. When it comes to any and all investments, there are always security risks. Some of these are just natural. You can't literally just delete all risk or security measure problems associated with it. And so one of the things that people might need to look out for is, if these things get very attractive, there's a lot of Bitcoins in there, somebody out there is always going to try and beat the system, finesse somebody, steal from somebody, or stick it to the firms or something. And so there's always going to be cybersecurity threats associated with it, even though these Bitcoins that the financial institutions that are approved, even though the ones that they've purchased are secure, there's always the risk of cybersecurity, hacking, attacks. That's just a normal part of the game, unfortunately. Now, if security systems are breached, this can be very dangerous, as basically the bank robbers would be able to steal all the money that's in the vault. And this will create a huge problem for the cryptocurrency space, the credibility, the trust, the transparency, and there's just going to be a lack of the ability to ensure that investors are going to be safe if they did purchase these spot Bitcoin ETFs. Hopefully that never happens. I don't wish that on anybody, but that's simply just a security risk that anybody that is buying these spot Bitcoin ETFs, crypto in general, Bitcoin, Ethereum, Dogecoin, you name it, you have to understand some of the risk associated with the purchase. Another big disadvantage that kind of sours the soup when it comes to spot Bitcoin ETF is the management fees, which I spoke on not too long ago. I'm not a big fan of that. I'm a big proponent and believer that, granted, I get it. These fund managers, they are taking on the risk, they are providing the service, and it does come with additional measures that they have to keep in place and services and so forth. So I understand that, and they need to make their cut. That is why they're in the business they're in. They have to make profit anyway, right? They have to make profit regardless. But I'm a big believer and proponent of you, the investor, when you purchase an asset, I believe you, especially the asset doesn't need a certain level of management by somebody else, I believe that you should get the maximum possible return that you deserve, because you take all the risk by investing in that product, that stock, that ETF, Spot Bitcoin ETF, or the cryptocurrency that you bought. And so you should reap the highest form of the reward. I don't think these institutions should be getting too much of a cut. I get it, they provide a service, so yes, they need to get paid. But the management fees associated with Spot Bitcoin ETF is 2 to 3 times that of average funds, and that is not cool to me. The last disadvantage can be tracking error. Even though these Spot Bitcoin ETFs are supposed to mimic and match the actual price of Bitcoin itself, there could be a discrepancy or potential for certain variances or things not to align accurately. Hopefully that's not the case, but there is a potential risk associated with tracking error and things not being directly one-to-one. I myself have extremely little to no exposure to cryptocurrency and Bitcoin specifically. But for those that are interested in looking at some of these Spot Bitcoin ETFs that are approved and want to take a deeper dive into them, I'm giving you 2 Spot Bitcoin ETFs that you can look at, do some homework and research on, and see if they fit your investment goals and needs. The first is iShares Bitcoin Trust, ticker symbol IBIT, and this is a product that is provided by BlackRock. It went public Thursday, January 11th, 2024. When this Spot Bitcoin ETF went live, it opened at $28 a share, but it went down 14% and is currently trading at $25 a share. It's crazy because on the first trading day, there was $1 billion put into this, right? Meaning influx of $1 billion coming into it because people are purchasing, whether it's small investors and big institutions are purchasing this. On day one, $1 billion went into it. The second is Wise Origin Bitcoin Fund, and this is offered by Fidelity, ticker symbol FBTC, and this also went public on the same day, the 11th of January, 2024. It went live at $44, but unfortunately it finished the week down 14%, just like the first one, and it is currently trading at $38 a share. Before you purchase anything, it's important to make sure you do your homework and research. It's also important to note that when it comes to putting money in a cryptocurrency, you have to, and any investment in general, you have to understand your risk tolerance, and it has to be money that you're actually willing to lose 100% of it, because that is a very real possibility, and there's more of a possibility in the crypto space more than anywhere else. There is something called Murphy's Law, and Murphy's Law states that anything that can go wrong will go wrong. So obviously Murphy not really a positive, optimistic type of dude, but there is some truth to that, and we need to always be aware of the risk associated to the investments that we're making and the asset classes that we decide to put our money into. I know that we covered a ton in this video, and it can get technical and confusing, especially when it comes to the Bitcoin and cryptocurrency space, but hopefully this video provides you a lot of clarity and you learn a thing or two by watching this. Feel free to leave any comments or questions you may have. I'll be more than happy to address it. Give us a thumbs up if you learned a ton from this video, and if you haven't subscribed already, make sure you do so. Until next time, happy investing, and make sure you do your research and due diligence. Welcome to the party, Spot Bitcoin ETF. Cheers.